Hello and welcome back to your Forex education. This video will start a bit differently. Up until now I was just a voice. You might ask yourself, how does this person look? Or is that even a person that's talking? It is a person. Hello, it's me. Now, in the previous videos, we touched on one harmonic trading pattern. It was the cipher. But what is harmonic trading? Good question. Let me answer it for you. Harmonic trading is a technical analysis approach that seeks to identify price patterns based on Fibonacci retracement and extension levels. It was developed by H.M. Gartley in the early 20th century and later refined by Scott Carney. The key concept behind harmonic trading is the idea that price movements in financial markets often follow specific geometric patterns and ratios. These patterns are derived from Fibonacci ratios such as 0.618, the golden ratio, 0.786, and others. The primary harmonic patterns include the Gartley pattern. This pattern is identified by a series of retracement and extensions that form specific geometric shapes. The key ratios involved are those two that I mentioned before, 0.618 and 0.786. The butterfly pattern. Similar to the Gartley pattern, the butterfly pattern involves specific Fibonacci ratios and its structure resembles a butterfly, hence its name. The bat pattern. The bat pattern is another harmonic pattern that involves precise Fibonacci levels. It is characterized by converging Fibonacci retracement and extension levels. Number 4. The crab pattern. This pattern is identified by its deep retracement levels and is considered one of the more complex harmonic patterns. And the more elusive cipher pattern that we already discussed in more detail. I will link to it in the description below. Traders who use harmonic patterns believe that these formations can signal potential reversal points in the market. When a harmonic pattern completes, traders may look for additional technical indicators such as candlestick patterns or momentum indicators to confirm the potential reversal. It is important to note that harmonic trading, like any other technical analysis approach, is not foolproof, and you should use it in conjunction with other analysis methods and risk management strategies. Additionally, the subjective nature of pattern recognition may lead to different interpretations of different traders. Now, you might ask yourself, is harmonic trading fundamentally more difficult than utilizing traditional pattern analysis? Here, I will give you an answer to this. Do with what you like. The difficulty of harmonic trading compared to traditional pattern analysis is somewhat subjective and depends on the trader's familiarity, experience, and comfort with each approach. Both harmonic trading and traditional pattern analysis have their own set of challenges and advantages. Here are some considerations. I will now give you a bit of an overview again of harmonic trading and some of its pitfalls but also advantages. Number 1. The specificity of patterns. Harmonic patterns have specific criteria based on Fibonacci ratios, making them relatively rigid. Traders need to accurately identify and measure these ratios to confirm the validity of these patterns. The subjectivity. While harmonic patterns have specific rules, there is still an element of subjectivity in their interpretation. You may slightly disagree on the precise placement of points, which can lead to various variations in pattern recognition. Number 3 is its complexity. Some harmonic patterns, such as the grab or the bat, can be more complex and less common than simpler patterns. This complexity may make them more challenging for some traders to master. Now to a little bit of a more general overview of traditional pattern analysis. It has a broader applicability. Traditional pattern analysis includes a wide range of problems and also patterns such as head and shoulders, triangles, flags, and more. These patterns are not tied to specific ratios, providing a broader set of tools for traders. This can also be linked to some problems with over-analysis that I already covered in a different video that I will also link in the description down below. Now, traditional pattern analysis also has its own subjectivity. Like harmonic patterns, traditional patterns also include some subjectivity in interpretation. Traders may differ in their assessment of trend lines, chart patterns, and breakout points. Now, traditional pattern analysis is a little bit more simpler and may be easier for novice traders to learn and apply. They often rely on trend lines, supporting resistance levels, and basic geometric shapes, making them good to start in your analysis journey. In summary, whether harmonic trading is fundamentally more different and more difficult than traditional pattern analysis depends on the individual's trader's preference and skills. Some traders may find comfort in the rules and specificity of harmonic patterns, while others may prefer the broader range of patterns offered by traditional analysis. It is common for traders to use a combination of both approaches or incorporate additional technical indicators and fundamental analysis into their overall trading strategy. Now that you've got a bit of an overview in harmonic trading and also its positives and negatives, you can do whatever you like with that information, but do something with it, and as always, keep learning. You will succeed in whatever you do.